Welcome back to another Ondo update. If you've been tuning in the past few weeks, all the way up from over here, I was suggesting that this could be the complacency stage of a market cycle over here, and it's now actually losing that key support, which would then mean that it's entered the anxiety and denial stage. However, this is a very key level of support, and I'm going to bring some hopium today. But please do, you have to listen to everything. It's very important. Just because I'm saying bounce doesn't mean we're in the clear. And even if I'm showing you potential bullish paths, doesn't mean that we're on it. But I'll go through it all in detail. As long as you listen to everything, understand it, then you're not going to get caught off guard whatsoever. This is a bounce location. Market is also in a bounce location. We're seeing multiple of these massive wicks being filled. And that's what I've been saying the whole time. When you get these massive wicks, you need to fill them. Great. That's happened across the market. And so, as it's also very key level support through the fibs, we're meant to see not only Ondo, but the market bouncing. Now, step one, that's step one. Step two is understanding where it could fail. And it could fail at this resistance, 115, 120. It could fail at this resistance, 125, 140. Now, it could actually pump all the way to 140 and still go to new lows. You all need to understand this. This is for every single crypto at the moment. When something dumps so aggressively, I've been saying even since this low, while it was around this area, from this point, we were a lot better positioned than down over here, while we were above the moving averages, before these bearish crosses started forming. So a lot better position, a lot more bullish things in our favor, rather than now with these bearish crosses, lost all the moving averages, lost all the supports, now resistance. So we were a lot better positioned. And so what it needed to do from this low, from that point, is break 180 to 195. It could actually pump into that zone and still go to new lows. So it was a better position for that area to flip into support. Now we're further down. So we need to worry about this, and this. All levels must be recovered without dumping to new lows, potentially from each one. So we could get up to the second one, dump to new lows. We could get up to the third, dump to new lows, or to the final one. Or as early as down over here for continuation lower. This is what everyone needs to understand with my updates. I'm literally showing you all the cases pretty much. You just need to react to the reactions. So right here, it's completed its task in filling the wick. As it's also the first Fibonacci area, we're actually meant to get a bounce. We've had that already. It's filled in the wick. If it fails to close under that wick, then it's going to bounce again. But the very earliest resistance, 110 to 120, we can see that there's a moving average here, the 200 there, the 20, the 100, the 55. So this whole area over here is all resistance, price, Ondo, and the market, not just Ondo. Please understand that. I'm not trying to make you guys hate Ondo. I'm not hating on Ondo myself either. I'm just telling you, this is what the market is looking like at the moment. And can it change? Yes. What does it need to do? It needs to not use this as a resistance. It needs to recover this. And then we get to move up into the next key area here and then here. But even if it recovers this level, everyone's going to get excited again. Everyone's going to get pulled back into the market. This is what I'm trying to warn you guys of. That's all I'm doing. And I will make videos every single day as this develops. But so far, even if we bounce, this is meant to be resistance. Everyone will get excited if it's recovered. And I'll say, guys, it's recovered. We're now looking for this to continue higher. We're all going to get dragged back in. But from here, or even if it turns out into support and gets up as high as 195. Now, realize that we're at 96.95 right now. That would add another dollar on top of current price. So there's gains to be made if it ever reaches that price point. Remember, it could fail here, here, at any point before that. But this is the final point where it could fail before putting in a new all-time high and, of course, continue lower. That would create a macro double top, wouldn't it? And it doesn't even need to go ahead and do that. That's if it breaks through this key area. At the moment, as we are down at between 91 and 99, this is a key level support where I expect a bounce into this key area of resistance, and we'll take it from there. I'm going to be here day by day to explain it. But yeah, things can change. At the moment, this is a bounce is expected. So could you play that bounce? Yes. But of course, if we fail to reclaim the highest moving average 130, then it will just roll over again back down into this support. So we're trapped between this area and this area, like this, waiting for one or the other to be broken. Even if we break out bullish, it could still end up going lower in the end. That's what we all need to understand. And yeah, that's pretty much it from me today. Don't forget to like, subscribe, comment, and share on the way out. I never want to make videos like these, but at least we've got this bounce short term to come back into this key area. And then from here, we'll see if it can push through or roll over. That's, yeah, if you want to get educated so you can actually identify all of this on your own, then use the links in the description of this video update to check out my mentorship ebook or Discord.